Hello and welcome to Investflow, your YouTube channel for qualitative stock analysis. My name is Niklas. Today we'll be looking at Adobe systems, one of the probably most dominant software ecosystems on the planet. But does it also make for a good investment? Let's find out. Adobe Systems, ticker symbol ADBE, currently has a market cap of around 240 billion US dollars. They employ around 22,000 employees. They were founded in 1982. They are currently headquartered in San Jose and are working in the sector software, to be more specific, software as a service. The CEO of Adobe has been Shanatanu Naroyen, sorry if I butchered the name, since 2007. Let's take a look at the share price for Adobe. As you can see, Adobe has been an excellent investment for investors in the last 5 years. We can also see that in the last 2 or 3 months the share price has come down a lot, from over 600 to around the 450 range. If we take a look at the ownership structure for Adobe, we can see that there really isn't anything worth noting, to be honest. A lot of the usual big investors in large cap companies like Vanguard and BlackRock, but no big insider ownerships, especially since the company is so old, being almost 50 years old in the software business. Let's take a look at the analyst ratings. We can see that there are no bearish analysts for Adobe. 6 of them have a hold rating and 25 of them have an overweight or buy rating. The lowest price target here is $575, which still has a around 13% upside, and the highest price target is $750, which has almost 50% upside. Keep in mind though that with the rapid share decline over the last month, some of these analyst ratings will get re-rated soon. Let's take a look at the business model of Adobe. Adobe dominates a lot of segments in the software business. For example, the graphics software market. As we can see, Adobe has Adobe Photoshop, InDesign, Illustrator and Lightroom, which make up over 90% of the market share in the graphics market. The only competitor that beats one of Adobe's products is SketchUp, which has a rather small market share of 2%. All the other competitors have market shares under 2%. So they have an incredibly firm grasp around the market. For any software business, it's important to look at how software is distributed. Adobe used to be mainly licensing, but in around 2013 they made a switch to software as a service with a subscription model. And as you can see here, all of the products are sold as a subscription. So for example, you can get the 20 gigabyte photography package for $10 a month. You can get the 1 terabyte one for $20. You can get the Creative Cloud, which includes all apps, for $53, which is the main seller for them. And basically this gives them a pretty predictable and sustainable revenue source every single month. Let's take a deeper look at the main seller for Adobe, the Creative Cloud, which offers more than 20 PC applications, mobile apps and online services. These services range from photography over video, design, web and UX, also to social media. On top of that, it also has inbuilt standards like color palettes and fonts. So basically, since they have around 90% market share in most of these different segments, most jobs will require you to know how to work with these Adobe products. So this gives them a great moat and also big pricing power, as you can see with the pricing. They highly encourage companies to pay the yearly bill, so they get a predictable revenue stream. Let's take a look at one of the more underrated segments of Adobe, the Document Cloud. The Document Cloud has many different use cases. For example, you can streamline your workflows, your document workflows. You can accelerate your business processes with the electrical signatures, or you can just use the normal document storage solutions. Adobe partnered with a lot of companies, for example Dropbox or Office 365, but also ERP software from SAP or CRM software from Salesforce. The Document Cloud allows you to work more mobilely than before. For example, you can access a report on your smartphone, edit a proposal on your desktop, and then add some comments on your presentation on your PC. With products like Adobe Sign, you can have more secure and faster processes for digital signatures. Adobe is the leader in customer experience management through their Experience Cloud. They are widely used by big companies, like 9 out of the 10 biggest international hotel chains use them, the 10 biggest US financial service companies, and even 9 out of 10 of the biggest e-commerce players use them. Adobe combines tools for data collection and analytics with content creation and workflows to create the best experience for marketing teams. The platform also is customizable and flexible so that teams can continue to work with it and integrate their own solutions, which makes it even more sticky. They also acquired Marketo, a company for marketing automation, in 2018 for 4.75 billion. Marketo mainly targets big institutions with their solutions and offers services like content personalization, experience automation, sales partnerships, or marketing data environments. All of these services and more offer to support marketing teams find and engage with leads, generate useful insights via analytics, and increase overall productivity. Adobe recently added a new segment to their portfolio of services with the acquisition of Frame.io for $1.3 billion. This enables them to offer 3D and augmented reality solutions in their subscriptions. Frame.io is a cloud-based video review platform that allows creative teams to upload, review, and share video content privately. With communications, collaborations, and creative integration tools, Frame.io is designed to help users streamline the video creation process. So especially in line with the whole gig economy, this has a great potential for the future, in my opinion. It's always important to take a look at the competition. Many of you might know one or two of these solutions, for example GIMP. Most of these are free to use and don't really have a lot of market share, which also underpoints the incredible stickiness and success of the ecosystem of Adobe. Before we continue, I would kindly ask you to thumbs up the video and subscribe to the channel. I would also appreciate if you share the video and comment your opinion down below on what to do better and what you liked about the video, since this is only my second video on this channel. Let's take a look at the last full year results for Adobe. Revenues increased 22%, net income decreased 9%, but don't worry, from the 5.3 billion in the year before, 1 billion was a tax payback. So if you exclude that, net income increased by around 12%. Gross profit got increased by 25%. Earnings before interest and taxes increased by 38%, and equity increased by 11%. Returns on equity have been steady at around 54%. For reference, a good return on equity is generally considered to be 20%, so they are leagues above that. If we take a look at the valuation, we can see that the PE ratio is roughly around the 5-year average of 53. The price to sales ratio is slightly above with 16. Price to book ratio is above the average with 17, but price to book isn't really the best metric to judge a software company. The price to cash flow ratio is under the 5-year average marginally, but still roughly in line. The PEG ratio also is in line with the 5-year average with a 1.8. The Piotrowski F-score, which shows financial stability, is on the very strong 7 out of 9 5-year average. If we take a look at the last 5 years, we pretty much see two perfect staircases. If we exclude the large tax payback they received in 2020. Besides that, they had a strong increase of revenue of 116% over the last 5 years, and net income even increased 180%. So you can see, with scaling, the business becomes more and more profitable. If we take a look at the revenue split for Adobe, we can see that subscription dominates the business with a 92% share. Products and services each have 4% of the revenue share. If we take a look at the debt situation, Adobe has net cash of 1.7 billion, so no financial debt to worry about at all. They currently have 12.4 billion in liabilities and equity of 14.8 billion. So the debt to equity ratio is 84, which is way below our guideline of 200%. So everything is looking pretty good in the debt department for Adobe. Let's take a look at the guidance for Adobe. Over the next 2 years, Adobe is expected to grow sales from over 5 billion to over 20 billion, EBITDA from roughly 8 to over 10 billion, operating profit from a little over 7 to 9.4 billion. This would leave them with an operating margin of 45%. And as we can see, this has been steadily growing from 2018 for around 500 basis points. The net income is expected to grow from 4.8 billion to 6 billion. This leaves them with a strong net profit margin of 29%. So let's summarize. Adobe has a monopolistic position with a lot of their products holding a market share of 90% or even higher. They do have great margins with a profit margin of around 30%. They have high growth rates, especially considering their scale. They have a nice future outlook because the gig economy is here to stay, in my opinion. People will continue to freelance more and do it especially online and with creative jobs, which Adobe often offers solutions for. On the negative side though, Adobe always is highly valued. The average PE ratio over the last 5 years has been 53, which is pretty high. They also have a lot of competition from free products, but so far they haven't really managed to grab a lot of market share from Adobe. Let's take a look at the mode of Adobe. We don't think they have a very strong technology mode. The technology is good, but they do have competitors that have similar, even better technology in their products. On the brand, it's a different story though. A lot of their products are market leaders and some are even industry standards. So you really can't get better than being the standard that students are told pretty much. For the experience, they also rank the highest, because with 40 years of experience, they are pretty much dinosaurs in the software industry. My outlook for Adobe is the following. Adobe has one of the strongest ecosystems on the planet. They have no real competitors, at least not on an ecosystem basis. For single products, there might be point solutions which are competing, which are even better maybe. But no other company has an ecosystem of solutions in as many different fields as Adobe. Through that, they have a lot of pricing power, which is especially important if we do get a high inflation environment. They also still have high growth rates, even though they already scaled the company pretty high. They are very profitable through their position and their ecosystem. They sadly are always at a high valuation, but I still think they have a good price potential and will be a sustainable winner in the future. I do personally own shares of Adobe. It is around 5% of my portfolio, and with that is my 10th largest position. So thank you very much for watching. I hope you enjoyed the video. I hope you found some value in my analysis, and I hope I will see you soon again. Thanks.